Good morning, G. So we are back after some testing, some updates. Especially the optimization takes tons of time since I'm using big samples of data. I use at least since 2004. We use all this range, all these cycles. This is the current price action or the levels that we are managing after the COVID money printing. Here's the starting of 2023. Here we have 2022 and another possible break of the all-time high in 2022. So we had a lot of action since, for example, I started my portfolio that was around December 21. So pretty much is what I'm testing. I'm testing the whole range in two different versions. So I'm especially optimizing for investing model. This is the model that will run EA or the money 100% automatic or as less as managed as possible, meaning the EA is already preset or optimized to handle every possible range or every situation. Here we can see we have 250, 290, another 250, 160, and the biggest move is $400. So in the spectrum or per my 20-year trial in the only sell model, here we can confirm it's only sells. If we go to the results and we check the order type, we will see only sells on this side. And we can also confirm in the report where we see the results. We can check the profit trades. We have a 61% profitable trades in a volume of around 26, 63 trades beyond the 50% or the 50% win rate mark. And it's very solid. I'll explain why with the, especially with the sell side model. And here we can see the long positions are 0%. So in this 30-year span, this is a model that is only using the main logics and the hard and soft stuffs by engine, because now this version is using engine A, B, and C, having the C as the master or the final, for now, the final engine that will rule them all, we could say. So we have very dynamic two engines with A and B, and the idea will be to have the side logics, the ones that are not starting yet, like scalping, stoppers, and the same but with the B engine and C engine to be active. Currently I'm only using these stops so I can have something clean. This is what we could say the skeleton or the backbone of the model. This will be the investing model number one of daavile with the B3 algorithm. So as we can see, we have 30% profit in a 100% 100k initial deposit. It's not showing the quality because I'm going to I'm testing up to July of this year, so I just need to download the data. I will get 90% as always. I don't need 99%. I don't need to pay premium ticks. This is enough for me. This is enough data. This is enough for me to know my EA is working perfectly, because as you can see, this is 2011, I think. Yeah, this is 2011 and this should be 2020. So the biggest gaps or the biggest volume spikes we see are during the major trends. As you can see, this is 2020. So let's go to 2011. That is not a similar scenario, but we could say it's the most similar in economic words, because 2011 was also a situation with money printing and that causing inflation and some doubts about the stability of the USA and the debt, like we already seen this scenario. So here we have it. It's another $430 move. So this one is a little bit trickier. And why, for example, I am optimizing for specific ranges like buy and sell. Here we have the buy model. This is currently finished per engines. So here we have all the engines working. As you can see, we have also side logics already working. This is only buy. We have the stress test directly 1 year. In the worst case scenario, we have a very good return, have a very good manage of the trend. So my task now is to use this range, that is 2021 12 December 07 to year today. This range is when I started my trading account, 2023. I optimized using, especially 2022 was very interesting, but I wanted to optimize using two specific ranges. That was this one when 2022 ended to go to 2023. There was a minor retracement in this area where we could get a good exit, so we don't have to take all these yellow box. The yellow box is the worst case scenario. The algo is not cleaning the as a counter trending model. We don't have to rely in probabilities, or we don't have to guess where price is going. We just enter the market knowing that wherever the price is going, we're gonna wait for the retracement. Why? Because this is a gold market. Like, this is a $1 trillion market. It cannot be manipulated that easy. No one can keep the trend unless price wants to go there. We have a lot of factors involving the gold market. It's not only the participants that create the supply and demand. We have also gold index. We have gold miners. As we can see, the miners are underperforming really what the gold price is really doing, or the CFD of Xauusd. When price was dumping for Xauusd, miners were recovering. So really, miners, if we compare the 2022 and 2020 all-time highs, well, they have a lot of room to recover, and we know that miners are key. So what's going on currently with gold is more of a economic factor of the USA. So it's mainly the rates. They're too high for the investors to be attractive. So that's why also we track the bonds. We have here the indices. We have the volatility index, the dollar index. So it's very important to have everything on your at least track. Like, have it tracked. It's not necessary for you to understand everything. Just know what's affecting the thing that you are trading. My money is in Xauusd. I care what's going on in Xauusd and what might affect. Also, another thing that it's affecting the price of Xauusd. Sorry, it's the fundamental news. I very simple. Just use, if I'm only a Xauusd trader, so I'm only trading Xauusd. I will have my filters like this, so it only shows me the red folders and the USD currency. So everything that happens in this week, for example, Fed Powell, it's very volatile. It can trigger moves that maybe you are not expecting. And for example, with my model, we are not guessing. We're not trying to tell, okay, Powell is gonna say something good that will send price up, and then I'm gonna set a stop loss here in case it doesn't. No. Instead of dropping one lot here, I use data. I use worst case scenarios. I use ranges. I don't need to use the worst case scenario. That is only for multipliers or progressions. So we don't have to be using, or especially to know the margin. For example, I know that my model can hold with any leverage. I don't even need 100 leverage. It can be done with 130, 1 to 10. Why? Because it's very well managed. It's very well balanced based in the data that we have. And I started the model with the data until 2020. I started here in 2021, December 08, 07, sorry. So as you can see, it's not a joke what I was trading in the next account. Like, you can see my percentage. I have all these statements here in my Dropbox. So you can see I'm sharing all the direct statements of the account every month, so you can verify. I had to stop in February of 2024 because I needed to update the code based in the new data. I use past data, but I also use my new data that is since 2021. I have live data, so I know how to trade these fractals, and it's very similar. Like, we had this big move, but also we had good spikes, and we have the next trend. So main reason why I'm stress testing two ranges, the one that I was testing live and the one that is showing the worst case scenario for either buy and sell. So for buys will be 2011, and for sells currently is 2020. Here you can see it's very clear 2020. But what I'm gonna do is very easily. This I was testing two sets. As you can see, the difference is huge. Here I'm holding more the positions. Here I'm cutting faster the initial range. So I might save this one as a as a new future model that I can work with, because I like holding the trades. As you can see, it makes more sense holding with buys, of course, because price of gold is easier to be more valuable over time. Why? Because gold is real. You know, gold is something that most likely will be here before and after. Well, it was before and will be after us. So the idea will be to always trust that side of the market to the gold price. So we will be counter trending with less risk every time we deliver value to the downside. So what happens every time you see price going up and we have sudden spikes? That's when the buy model will start making money. Of course, you will be handled some drawdown. But the idea here is that instead of having to cut losses or having to create a setup like, let's say, a long position here, where you need to wait for this entry, you need to adjust your risk reward. You hardly will go for this move unless you're a sync trader. This almost, it's a rollover for a year, this 2022 2023, so hard for people to manage this type of ranges. So the algo is just better. So in this case, for example, as you can see with the buy, it's very slow. So it's not like with the sells. Like, as you can see, we can see the moves to the downside are very aggressive, and the moves to the upside are very sustained. So you have two types of poisons: the one that is gonna kill you slowly, the margin, until boom, you get the retracement you needed, or the ones that you will have sustained trends, and then you will have abrupt drops. So what's happening? Buy model is showing you that, for example, there's two options. We can either let's use this one as draft. Have two options. In this case, we could either use sell only and buy only, and then we have the option of sell and buy. How we do this? With the EA, we can set magic numbers. So magic number is pretty much this case, my EA has the option to set it manually. Not every EA allows it. It should be a standard. It's very useful to have this option available. Also, for example, slippage protection, just extra tools for you to manage more efficiently the EA. So what I do is I set, for example, 777 EA. In this case will be my number 77. This will be, let's say 888, and in this case it will be shared. So what will happen? For example, in the case that we're using a separate magic number, meaning the EA will trade a specific, I need to load, for example, the set file, right? I need to load the set file that I'm using. Let me save this actually. And in this case, always save your work. Keep it in order. As you can see, I go from testing 1 to almost testing 100. So just keep everything in order. As you can see, if I give this 88, here it won't change anything because I'm already telling the EA to only open shorts. So as you can see, that's why the main reason I haven't fixed my code to understand that it doesn't need to open buys. For now, I'm using it like this. It's very good for me, but also it's bad for the PC since this generates some load in the drive. That's why I always do the rough work for the clients. I try to always have the models updated, use new data. That's why I'm always telling everyone this is a non-stop task, because we really, as traders, we use past data, but we also rely on current data to confirm everything is going swiftly, you know? So for example, if I'm using one magic number per site or per model, we could say this is the the worst case scenario for buys. I mean for sales. Why? Because we have a very sustained trend. We can see we have very little retracements that we need to adjust EA to be very aggressive. That's what I did here compared to this model. As you can see here, I'm cutting all these ranges faster, all the minimum ranges here in July. That is this retracement here. You cannot see it, but it's this white score. Actually, we can go to, there's a special hack to, and you need some good ticks with no trading view premium. So let's go here to 2020.